Now let's talk about Naspers, which of course is a multinational media giant with huge businesses in digital distributed television here in Africa and elsewhere. But its real gem, of course, is the 35% stake in Tencent in China. What a business! And of course then a whole slew of other internet-related businesses in Europe and Latin America and all over the show. It's really like an emerging markets internet and e-commerce investment holding company, which just happens to have come out of South Africa, so we're lucky enough to have it listed on our market. It's got a market capitalization of 1.04 trillion rand, so that makes it South Africa's largest corporate, I think, once you've done all the maths, and now that SAB Miller is out of the picture and so on and so forth. It's certainly the largest index constituent here in our ALSI 40. Price to earnings ratio comes in at 102.7, not very strong earnings relative to its share price. It does pay a little bit of a dividend there, showing as the yield 0.22. But of course, this is the tricky one. The valuations always look very elevated, but the businesses itself that it owns appear to be much more valuable than the market's giving it credit for. So how do you guys view this one?
Well, I think that P unwinds quite quickly, and we've seen that over time, and it just continues to hold its rating because it is, as you say, the largest. It holds a 35% stake.
There's the share chart while we're talking. So you see it has been slightly higher, but it's been a wonderful hold over these years.
Yeah, and I mean, it holds a 35% stake, as you mentioned, in China's biggest internet company.
Which is listed in Hong Kong, as we all know, so that means you can actually see how much that stake's worth. And it's almost as though if you take the valuation of that, everything else you get for free.
Correct, and I think, a lot of hedge funds have actually jumped on the back of that without any sort of fruition, because that discount continues to stay quite wide.
That's where they kind of construct a trade where they own the Tencent thing, and then you get the stub for nothing, and they're waiting for that value to be apparent at some point.
Yeah, so quite simply, you would short out the Tencent and go long the Naspers, and you would get the run.
But it hasn't really worked, is what you're saying.
It hasn't worked, and I think there's a lot of speculation as to why that is. I think one of the reasons is that one might think that a lot of the SA or pay TV type businesses are actually having cash expatriated into the Tencent and internet type operations, and maybe the market is attributing more value to those businesses than the local rump.
But Bob van Dijk, the new CEO, and Koos Bekkers, the executive chairman or semi-executive chairman, I mean, they've really built a very good portfolio of e-commerce businesses as well. They've got this joint venture with Schibsted in the classifieds arena. They've got a whole lot of businesses like Spree and Flipkart and so on, which in potential valuations, equivalent to Amazon and beyond. So I don't know. I always think people haven't done the maths, haven't thought it through. There's considerable extra value under the hood here.
Correct, and I think if you take a forward sort of P, I think the consensus view is that actually that P actually halves in a year, and I think it's for that reason. There are those additional you have these touch points with so many consumers globally, and you're able to sell more and more products through them as digitization becomes more prevalent and and we change our consumer behavior, and we're able to purchase things online more, and that sort of trend continues. So I think to your point, yes, I think that the market really has to look at the growth and the fact that they actually do own these consumers.
So they've acquired all of these businesses, and in time it'll become apparent how valuable they are. Okay, look, I'm hot on this one. Obviously, we're very heavily invested. We think it's something you've got to own, and we're very lucky to have it on our market. Do you feel the same way? You're hot on it?
I agree with you. I think you do have to own it. I think a lot of fund managers agree. It is also the biggest counter on our local bourse, as you've mentioned. So, it is a high beta stock, and a lot of fund managers hold it for that reason as well.
Just in order to not underperform the market if it has a good spell.
Correct.
Okay, good. We're going to take a quick break. We're hot on that one.